Today we will talk about Booking holding with the following question. Is Booking interesting to buy right now for a value investor? First, we will look at the profile of Booking. Booking owns several brands. Booking.com, Priceline, and Agoda are all three OTAs, online travel agencies, that specialize in hotel reservations, car rentals, vacation rentals, flights, and other activities. At first, I thought they were competitors, but in fact, Priceline is more known in the US, Booking.com in Europe, and Agoda in the Asia Pacific region. They also own Kayak, which is a travel meta search engine, which aggregates prices for hotels, activities, car rentals from different sources, including the ones owned by Booking, if you understand what I mean. Finally, they own OpenTable, which is a platform for online restaurant reservations. We can see that they are quite geographically diversified, operating in more than 220 countries. Wait a minute. Hmm, I see.
The Voyager Station Hotel is expected to accommodate 440 guests, while the Pioneer Station Hotel would be a more intimate experience with the capacity for 30 space travelers to stay at once.
From their report, we can see that they have impressive metrics, with a revenue growth of 12% per year on the past 10 years. From our app, we can see that the return on invested capital is around 50%, which is amazing. It means that for each dollar you have invested in the business, you get 50 cents back each year. However, we can see that the return on equity is negative because this value, the equity, is negative for the following reason. The total amount that they spend to buy back their own shares is bigger than the other elements in the equity. In particular, it's bigger than the cumulative retained earnings. In summary, we can see that all the key metrics related to their operations are in green. However, the valuation seems a bit high, but we will discuss valuation later. First, let's discuss the Q2 2025 that they released. We can see that the numbers are still good, with a revenue growth of 16%, but 12% on a constant currency basis, and free cash flow grew by 32%. However, we can see that the GAAP net income decreased by 41%, which is unexpected regarding all the other metrics. Let's dive in. From their report in the income statement, we can see that it depends on interest expense and other expenses. But what are these? In fact, we can see that the biggest elements for interest expense, it came from the amortization of debt discount on convertible senior notes. I hope it's clear for you. Next point. It's a joke, of course. What happened is the following. The 1st November 2024, the management decided to pay back the convertible senior notes, which was due in May 2025 in cash. The total amount which was raised back then is 783 million, and this amount had to be amortized over the remaining period, then 6 months. We arrived then at 130.5 million a month. 2 months later, then for the 31 December 2024, the remaining part had which has to be amortized is 523 million, and it's the reason why this value appears in your income statement. Now, regarding at the other expenses, we see that the biggest element is foreign currency transaction losses and everything related to debt instruments denominated in other currency than the dollar. Indeed, as you may have noticed, the dollar lost nearly 15% or something in the latest month. A particular key driver I would like to mention is the fact that they focus on offering a complete experience with the vertical integration of booking a flight, an hotel, and activities all together in such a way that clients will not think about booking for hotels only, but for their entire journey. As management said during the conference call, we reached a milestone with connected trip transactions, where customers choose to book more than one travel vertical with us, representing a low double-digit share of Booking.com's total transactions and up over 30% year-on-year. Moreover, they focus on AI. With travel vertical specific agents, it makes sense. People want an easy way to plan their holidays, booking a flight, an hotel, activities. What else would be even better than having a chatbot or an AI tool which helps you select the best offers based on your past experiences? As a reminder, their mission is make it easier for everyone to experience the world. Like all businesses, they have risk and uncertainties. Here are the biggest, in my opinion. Competition, of course, with platforms such as Airbnb and Expedia. However, as we have seen in the numbers, it's undeniable that they have a competitive advantage in their sector. And as long as their growth and their margins remain stable, it's not that important to have competitors because it's true for any businesses. Of course, we may live other travel disruptions, but if it happens, it means that there is a virus or worse, then we will have other issues to deal with. Now, let's discuss about valuation. As we can see, the stock price is currently around the DCF value and even above. It means that the market is currently pricing in both the growth and the stability of the margins. And the AI has come to the same conclusion. The price is where it should be, taking into account the growth and stability of the margin. Thanks for watching, and remember, everything you will see or hear in my videos are my personal opinion. It's not a financial advice. You should do your own due diligence and research. If you have a stock you would like to discuss or a suggestion for improvement, let a comment in the section below. If you found this content useful, feel free to like the video and subscribe to my channel. Once again, thanks for watching, and remember, don't waste your time, invest it.